oxymoron is another man's folk hero.
Saturday mornings from 9 on BBC Radio 5 Live.
11 minutes to 6. You're listening to Wake Up to Money with Mickey Clark and Andy Verity. Now, India's going to release its latest economic growth figures later today for the 3 months to the end of December, which is expected to show an annualised growth rate of 5%. That might sound enviable if you're George Osborne, but it's actually disappointing for Asia's third largest economy. It used to be one of Asia's greatest hopes for economic expansion, but today the government's expected to unveil a tough austerity budget. So what's the outlook for the country? David Cameron said he hopes will help us export our way back to recovery. We can talk to Bundeep Singh Rangar, who's the chairman and founder of IndusView, which advises companies on how to expand in India. Good morning, Bundeep.
Good morning.
So what do you make of the numbers we're looking at seeing from India, around about 5%? Is that a poor growth rate for India, or okay, or what?
It's not the greatest growth rate, because if you look at it relative to inflation, which runs at about 6.2%, in real terms, that's still negative growth. So to get real growth, you need north of 6.5%. The target's really 7.5% and above to get India to be an aspirant to be a top world economy that it wants to be.
Why is inflation quite that high?
Fuel and food are the two big drivers for inflation in India. So part of it is the rise of fuel oil imports. And also gold prices, because India is a big importer of gold. So those two factors, on top of just agricultural food costs, are driving inflation.
Why do they import gold?
India is the largest importer of gold.
What do they do with it?
Jewelry, mostly. Weddings,
right.
Jewelry is 960 million tons last year, so it's the biggest importer of gold in the world.
That's a cultural thing, isn't it? Very much for India. But there are structural problems with the Indian economy, aren't they? Like tax receipts, actually just getting the taxes in from the economy.
Well, that's what's kind of scary, because India always boasts of having this 250, 300 million middle class, not to mention an upper class above that. Yet taxes are only collected from less than 3% of the population, roughly 35 million people. That's a huge gap between 35 and 300 million people. So what's happening there? The taxman is not doing a good job collecting taxes.
Why is that?
Well, there's historic reasons. Part of it is, of course, the infrastructure is not set up. Another part of it is India is focused on the upper income earners, and to some degree taxing multinationals like Vodafone and retroactively applying taxes, whereas it should be focusing on widening the tax base.
Right, okay. But so long as you're only collecting taxes from 3% of the population, there's a limited amount a government can do certainly to help the economy.
Well, they need $1 trillion to invest in infrastructure over the next 5 years. That's not going to happen from a 3% tax base. You also then need to get foreign investors to come into India. That's not going to happen unless the tax position for multinationals is clear. And those two things alone are big drivers for India's growth, because if you get the infrastructure solved, India's GDP gets boosted because there's less wastage and less inefficiency.
It's interesting you're talking about investment into India, presumably from Western countries, but actually the story in the UK has been very much the other way round. It's been the story of Tata and Jaguar Land Rover.
Well, so India does have very globally aspirant multinationals, but India itself is a growth economy, and it does need foreign investment. The surprising sort of secret weapon, if you may, for India is its Indian diaspora that's overseas, because unlike other BRIC economies, India has about 25 million people of Indian origin overseas who sent $70 billion into India last year, which is twice as much as the foreign direct investment and foreign institutional investment combined.
So that's money that they're making overseas and sending to relatives?
That's correct. Most of it goes in a bank account, and that can be increased further to actually help this current account deficit that now threatens India's investment grade status.
Right, but what about its relationship to the UK? We do have this historic relationship to India. Why haven't we been able to exploit that in the UK in order to try to boost our exports?
Part of it is complacency. I think Britain just enjoys a comfortable position with India and kind of takes that for granted. And it's until and unless you hear of a fighter jet sail to France that wakes Britain up, until that point, this just kind of rests on its laurels, and you can't. India actually looks to the UK as being a proxy for capitalist growth and stock market liquidity, just the way I think a lot of mainland Chinese companies look to Hong Kong. But that's not built in the same way as it ought to.
Leaving aside the tax things we talked about a bit earlier, what about companies buying into India? We know about Tata and the takeover of British Steel. And Jaguar Land Rover. But what about British companies? Are there obstacles thrown in the way for British companies to go in and buy Indian companies?
There's certain sectors where the FDI is more restricted, but a lot of sectors like telecoms are completely open, and hence Vodafone's move in there. The question they had was the tax implication. But that's one key thing to watch out in this budget, is how much more open is the finance minister going to make the economy to put the Indian economy back on track for growth, which his predecessor arguably took a course off and veered away from it.
Thank you. Bundeep Singh Rangar there, chairman and founder of IndusView. And a few texts, Mickey, and maybe Justin, I don't know if you have an answer to some of these texts on RBS shares. One texter, Matt, is saying, I remember